All right. Uh, huh. Trying to record. So welcome to financial accounting. I'm your tutor, Coach Samuel Ivanda, and I will be taking you through this paper. So on my screen is a syllabus for the Institute of Certified Public Accountants, Uganda. But I know that we have quite a large audience of people that are joining through from different places. So I just want to move right away to the financial accounting syllabus, which is the reason why we are here. So financial accounting is a paper which is part of the CPA course. It's paper one. For other courses like ACCA, it might have a different structure in terms of which paper it is, but the financial accounting that we study, these are principles. So these principles cut across everywhere, so they are the same. So you will basically be able to interface this with the same principles. So financial accounting, it being a foundation paper, there are quite a number of other papers that are ahead of it, which is the financial reporting, which is the advanced financial reporting as well, and then the public financial management. And this is for the CPS syllabus, but for other courses, it might be different. So when we are learning this paper, of course, we have in mind that this is a paper that we are learning for the exam. So what that means is that even as we start studying this paper, we have to understand what is the end in mind. Why are we studying the paper and what are our aspirations around the paper? So that is what that is our key goal when it comes to this paper. So studying the financial accounting paper will give you insights around the role of accounting and accountants. Basically, you want to understand, what do accountants do? And I think this is also an opportunity for you to get to understand your profession, because I know by the time you signed up to study this paper, you already have aspirations of becoming that accountant. So it is very good for you to understand, who is an accountant. Are they just people that receive money from customers like cashiers? Or these are people that will cascade down to things of taxes, things of financial reporting, things of cost accounting, and so on. So that is very important. And then, of course, we also need to appreciate basically the accounting process. Where do we all start from? Starting from the point in time when a transaction happens to the point in time when financial statements are actually prepared. So we'll be able to understand that. So you need to be able to know what accounting is and what do accountants do at the end of studying this paper. And then we also need to be able to describe what is called the financial reporting framework. Now, the financial reporting framework, accounting is just like law. We have a framework under which we do practice accounting. So things like standards, accounting standards, those form a key basis for the accounting reporting framework. Of course, every nation could have additional reporting frameworks. Like, for example, the Company Act, especially for Uganda, and maybe Kenya may also have something very similar. But there are those other jurisdictions that define how we prepare our accounts. But global, or at a global scale, the international financial accounting reporting standards come into play, the ISCs and IFRSs. And when we get into public sector, IPSAS has also come through the International Public Accounting Reporting Standards. So all that is forms part of the reporting framework. Now, as a student of financial accounting, one of the things that we also get in depth are the aspects of the forms of business entities. Now, one of the things that you're going to do well as an accountant is you're going to prepare financial statements. And you're not just being prepared to be an accountant of a private entity, but you're also being prepared to be an accountant that could say be an accountant of an NGO, a non-for-profit, an accountant for a sole proprietorship business, an accountant for a public enterprise. So the reason why we study the forms of business entities is for that core purpose. And as a student, at the end of this course, you should be able to distinguish between how each of these different entities work. And what that helps you is that at the end of the day, you can be able to tailor the accounts that you're preparing to each of these forms of businesses. And the other critical learning outcome is the being able to record transactions in the book of prime entry, ledgers using the double entry bookkeeping system. Now, one of the things that you need to appreciate is that accounting has an accounting cycle, accounting process. And like I mentioned, we have where transactions start from to where these transactions form part of the financial statements that we see in the financial reports. So, as an accountant, one of the key things you should be able to know is to how to enter transactions into the books of prime entry, basically the ledgers. How can you be able to sometimes they call them books of original entry. Sometimes they call them books of prime entry. But books of prime entry are usually the first books where transactions are recorded before they could be transferred to the ledgers. So I know that we know some of you might have heard of books like sales day book. A sales day book records sales on credit, or purchases day book, which records purchases on credit. Sometimes these books could be called journals, like a purchases credit day book could be referred to as a purchases journal. And then we have the cash book. Just as the purchases day book and sales day book are recording credit sales and credit purchases, the cash book goes ahead to record the cash transactions. So a cash book could also be regarded as a book of original entry. So usually when we are entering transactions in those books of original entry, we just enter them. We do not even follow the double entry system. It is when we are now transferring transactions from the books of original entry to ledgers that we now start to apply the double entry. And by the double entry here, I mean the debit and credit. So that is what you need to be able to do. So as an accountant, as a student of financial accounting, by the time you're done with financial accounting as a study, you should be in place to be able to enter transactions through the double entry bookkeeping system. And then one of the aspects that you also is very important for us is that when transactions have been entered from their books, books of original entry, if we pick transactions and post them into the ledgers, that is not where the accounting ends. We have to balance off the ledgers such that we are able to get the closing balances. Sometimes we call them the balances brought down or the balances carried down. And once we have gotten those balances, the balance brought down or balance carried down, those balances are now transferred to what we call the trial balance. So we transfer those transactions into the trial balance. So the trial balance is also a very important aspect when it comes to financial accounting. So when we transfer transactions to the trial balance, the trial balance from its name, trial balance, is supposed to balance. So means that the debit and the credit side of your trial balance has to balance. And sometimes the reason why it may not balance is because there are some errors. So basically, and what I mean by that, I just want to demonstrate it to you onto what I mean by a trial balance balancing. So if you've not seen a trial balance before, I just want to demonstrate to you how a trial balance would look like. So a trial balance usually has the account. Sometimes people may just call it as a detail, but it is an account, uh, and then you have the debit, and then you have the credit. So you get transactions from the ledgers and post them into your trial balance. So a case in point, you might get let's say you might have land. So land being an asset, it has a debit balance. So land might have 40 million here. These are shillings, so it's not $40 million. These are shillings. So you might have land of that value. You might have capital. Capital is equity, and maybe this capital is of 20 million. Just want to put commas such that you can see the value very well. So you might have, let's just call it 20 million. And then you might have a motor vehicle of, let's say, yeah, 15 million. Let's just make it 15 million. And then what else? You could have cash. Cash is also a very common asset, which has the debit balance. Maybe you have cash of 2 million. Okay. And then let me just get something else that could be on the credit side. Sales. Sales is income, so income have a normal credit balance. So let's imagine we have some income of 1 million. So what it means is that ideally, I'll tell you, let's say we have purchases. And now I want to make it a bit closer. Let's say we have purchases of 2 million. I'm going to adjust this to be, let's say, 10 million. Let me also just have, let's say we have a loan from the bank, and maybe this loan is, let's see, this is 59. Okay. Let's say this is 29 million. Okay. So let's see how our trial balance is supposed to look like. So we have this, and then we have this. So our trial balance is balancing. Wow. So if our trial balance is balancing, this is a perfect way. Now, what I wanted to share with you, these accounts are coming from the ledgers. Basically, we have a land account, which we've balanced off, and we have a balance here. We have a motor vehicle account, which we've balanced off and brought the value here. We have cash, which account has 2 million, or we have purchases and so on. Okay, sorry, this is supposed to be here. Okay, so what is happening? I just want to stress the whole idea of errors. So as you can see, we are saying correcting errors in the accounting records, and this comes immediately after the trial balance. So you've seen how the trial balance looks like. So I want to demonstrate now to you how the error would now work. So as you could see, we have our trial balance balancing. So let's say instead of bringing 15 million here, we brought 1.5. So here means that our trial balance is not balancing because we made an error of bringing 1.5 instead of bringing the 15 million. So means that we made an error, okay? We made an error. And that error is called an arithmetic error, okay? we have made an arithmetic error in bringing the 15 million into our trial balance. So that is an error. So as an accountant, you should be able to know how to correct that error. Now, what is going to happen is your trial balance is going to show you that it's not balancing. And immediately that should tickle your mind to understand that there is an error. So partly the error could be an arithmetic error that you've actually made. Okay, so that could be one aspect. One other error could be in the way you recognize your transactions. For example, you brought land here, but instead, let's say this is 15 million. So everything is okay. But instead, these purchases, which are supposed to be on the debit side, you have credited them. What means that now this will be 57, this will be 61. So if you already made an error, and already that error has created a difference of 61 minus 50 of about 4 million. So what that means with that error means that your trial balance is not going to balance. And that error is an error of principle. So you've basically made an error of principle because you have credited something that should be debited. Okay? So for you to correct such an error, there are also other errors. Of course, there is error of commission. There is error of single entry where you only do one entry. There is error of transposition. So there are quite a number of errors, and we shall be learning those errors along our journey of financial accounting to make sure that we acquaint ourselves with how to correct each of the errors. Okay, so that is very important. So correction of errors is important because unless we correct errors, we cannot proceed to use this trial balance. And usually when we are correcting errors, what sometimes we do before even we get into correction of errors, we introduce what is called a suspense account. And that suspense account usually has the difference, just like the way we got 4 million, that suspense account will have 4 million. So what that means, if you add your records very well, if you add your records very well, you realize that it has now balanced. But this suspense account that has been introduced is a temporary account and does not play any kind of role for us. So that is important for us to just appreciate that. So once we have once we've understood about how to correct errors, it's also very important for us to understand how to prepare the financial statements for business entities and the nanny for profit making. So one of the things that you'll come to appreciate even as we study is they are what we call the financial statements. Now, the financial statements, there are quite a number of them. There are quite a number of financial statements. So we have what we call the statement of comprehensive income. Okay, so the statement of comprehensive income for it helps us to determine whether business has made a profit or loss. This so-called statement of comprehensive income, some people may call it the income statement. Income statement. Some people call it the profit and loss account. The profit and loss account. And all these names are common for the private sector. Now, when it is an NGO, this same statement could actually be called income and expenditure account. could actually be referred to as income and expenditure account. So then we have what we call the statement of financial position. We have what we call the statement of financial position. Now, this statement of financial position is mostly one, I just want to say that most people may refer to as a balance sheet, but as a financial accounting student, I want you to now adopt the statement of financial position. Now, the statement of financial position helps us to understand the assets, the liabilities, and equity of an entity. It helps us understand those aspects. So we're able to understand what is the position, what is the net asset position for this company. And this comes also from the background of what we call the accounting equation. When somebody says accounting equation, what they are trying to mean is assets is equal to liabilities plus equity. Sometimes people add the word owner's equity, but it is equity in its own. And as you advance, you'll understand that equity is just beyond capital. Equity could include general reserves. Equity could include preference share capital, okay? So you'll be able to appreciate what is under equity. So a balance sheet, which is demonstrates to you the assets and liabilities and equity, is what we call a statement of financial position. Somehow, the non-for-profit also call it the same name. So there is not any different. I know that there is something very similar to a statement of financial position that is usually called the statement of affairs. Now, this statement of affairs, basically, we use it to determine capital. And usually, we're looking at opening capital. So sometimes you might see questions, you might come across questions that are asking you to prepare a statement of affairs, or you're seeing somebody within the notes that somebody did a statement of affairs. Statement of affairs, similar to a balance sheet, but for it is just used to determine, let's say, capital for the business. Okay. And then we have what we call the statement of changes in equity. The statement of changes in equity. So the statement of changes in equity helps us in understanding how different equity items have changed. And now here, I already mentioned and said that whenever somebody speaks about equity, they are speaking about things that are beyond share capital. So they're thinking about general reserves, of course, share capital itself, I'll not leave it out. But there are also things like, let's say, preference shares. There are quite a number of things that you would be able to think about. Sometimes also, very often, we have what we call the retained earnings here. And I know when it comes to non-for-profit, some of these names may differ. For example, capital could be looked at as accumulated fund. Sometimes the retaining earnings could also be referred to, let's say, excess of income over expenditure or surplus. So quite a number of names that could come through, but we shall be able to get into depth when we get there. I do not want to confuse you onto some of these things. So we also have what we regard to as the statement of cash flows. Statement of cash flows. So the statement of cash flows basically gets into depth to look at your cash inflows and cash outflows. Basically, it's looking at what money comes in and what money goes out. That is the cash inflows and cash outflows. Okay. So having that in mind, of course, we will look at the different methods of also preparing the statement of cash flows, the indirect and the direct method. All those will come through as we study, and you'll be able to appreciate. Sometimes we also go ahead to include notes to account. I know that when you're preparing a financial report, you do not just leave the reports there. You'll include schedules, you'll include disclosures. So those notes, the different notes, are part of the financial statements. So that is what you as a student of financial accounting that you'll be able to interface with on your journey of financial accounting. And then we have the reconciliation of financial transactions. So one of the most common aspect around financial reconciliation is the bank reconciliation. So you're going to be able to learn how to reconcile the bank statement with what is in the cash book. And if specifically for the cash book, our interest in the cash book for bank reconciliation is the bank column of the cash book. Because when you should be knowing, I know that some of you have some background in financial accounting, and if you do not know, what I could say, and we shall get in depth when we're studying. When I'm teaching, I have a mindset that you are fresh and you do not know these things. So that's why I want to make sure that I teach you these things from first principles. So the bank statement is what is held at the bank. So every business that is, of course, has a bank account, has a bank statement. And this bank statement will have records of what the bank has been involved in. And then you as a business, you also have what we call a cash book. So this cash book records the inflows. Basically, it records receipts and payments. So you have to make sure that you're comparing your cash book records with what is on the bank statement to be able to find, are there any direct debits? Direct debits, those are kind of transactions that on your bank statement that have been directly debited there. Things like bank charges, standing orders, ledger fees, those are basically direct debits. And much likely you will not have those details within your accounting records because you do not know. These are usually transactions that are mostly determined from the side of the bank. Of course, things like standing orders, you might have asked the bank to do a standing order, but these are transactions that sometimes you may forget to include within your records. And then we have what we call the direct credits. So direct credits means that somebody paid you money, but they went to the bank and directly deposited this money. So it's a direct credit. So much likely, they may not have informed you. And so it means that within your records, you do not have this information. So what that means is that you need to be able to reconcile what you have within your records with what is there. So that is what we shall do with the financial transaction reconciliation. Of course, there are other reconciliations that could be around prepayments and maybe accrual reconciliations, and so on. but we'll be able to get in depth as we proceed. So then there is also prepare accounts and financial statements from incomplete records. So we understand there are quite a number of businesses that do not have accountants in place. So these are businesses that just operate and take records of, let's say, they take records of their sales, they take records of their inventory when they purchase, simple things. So sometimes these businesses interface requests from, let's say, the tax authorities, requesting them to prepare financial statements. So as an accountant, you should be able to be in place to be able to prepare financial statements from incomplete records. Basically, being able to leverage on things like profit margins, being able to use whatever information is available to come up with what you may call the financial statements. And then the general features of financial statements. I already shared with you some of the key financial statements, and I was trying to describe what you'll find in each of these. Of course, the statement of comprehensive income, you'll find things like income and expenses. And then at a later stage, you also be able to see other comprehensive incomes listed also within the same statement. And then with the statement of financial position, we spoke of assets, liabilities, and equity. Basically, the elements of financial statements that are showed up in the statement of financial position are those three. And then I already told you about the statement of changes in equity. We will be able to also look at the formats of how each of these statements do look like, such that you're able to follow through and be able to prepare these at the end, because there is no paper that I have seen of financial accounting that lacks a question on preparation of financial statements. Always the examiner, I know they will set things of bank reconciliation, or set you things of depreciation, preparing disposal accounts and so on, but they'll always set you a question on preparing financial statements. So we'll be able to get into depth of that, such that you're able to get acquainted on how you can prepare each of the financial statements. Okay. That is very important. And then we will also apply some selected international financial reporting standards. So financial reporting standards, especially for financial accounting, we do not get so much in depth, because there is another paper called financial reporting where we do standards in depth. So there are some selected standards like IS2 related to inventory, or IS16 related to property equipment, or other standards like standards around provisions. So we'll look at those simplistic standards and see how you can be able to apply them in your financial reporting. And then we'll also be able to just also look at the ethical responsibilities and challenges of accountants in businesses. Accountants are one of those professions that are interfaced with ethics on a day-to-day basis. And that is why we have different professional bodies like the Institute of Certified Public Accountants that regulate how we work as accountants. So that is very important. So we shall understand what is your ethical responsibility, the objectivity, the professional due and care, all those aspects, to see how do they play in your journey as an accountant. So those are some of the learning outcomes. Now, this paper, of course, is going to test you on aspects of knowledge. Basically, you know the knowledge, the skills, being able to prepare, because you're going to be asked to prepare, and then comprehension as well. Sometimes there are multi-choice questions onto this, so they will be also trying to test you on aspects of principles of accounting. Okay. Now, specifically for CPA, this is how this examination is structured. So the examination is 3 hours and usually made up of 2 sections. That is section A and section B. So section A are multiple choice questions, and these are compulsory. So usually the examiner will set a question. Maybe they will provide you information around the assets of a business and ask you for depreciation. And they'll give you 4 answers where you're supposed to choose only one option. Yeah, that could be a case. And then they could ask you more other things. One thing I usually encourage students, for you to pass these multiple choice questions, I know that they may seem to be easy, but the most critical aspect for you to pass these multiple choice questions is to read extensively. I know that because financial accounting is looked at as a calculation subject, some students ignore them going through some notes. One of the things that we do at Achievers is we provide you notes for your study to make sure that at least you're going through the right information. So that's critical for us. And section B, of course, comprises of 20 marks each for each question. And you're supposed to attempt 4 questions. Now, one of the things that I want to share with you, even as we start on this journey of studying financial accounting for your exams, is that you need to practice as many questions as possible. And there are quite a number of past papers that even we provide to our students. You have to practice and practice and practice and practice, because this is a paper where you also be tested on speed, being able to answer questions within a given time. So make sure that you start on this journey with that kind of mindset. So we have a detailed syllabus, and this one you'll be able to get it just in case you do not have it. It breaks down each of the topics from the introduction of accounting, what do we study, to getting you to the reporting framework, which I already mentioned and said these are like your IFRSs and ISs. Since this is a foundation paper, we even get down to understand how are these IFRSs set and what is their purpose, which bodies are responsible for setting these IFRSs. So you get to understand. And of course, which is also more critical, the conceptual framework, we also get to understand it. We get down to understand the information needs of users, knowing that we do not prepare financial reports for ourselves, but there are users that utilize these financial statements, like government, like shareholders, investors, and so on. So we'll be able to see, as well as understand what decisions are these users making when it comes to that financial statements. So all this comes into play: qualitative ethics of useful information, the general features of financial statements, and IS1. IS1 is also a key standard that we also look at this level. I know what we expound it when we get to financial reporting, but it's very critical for you. Okay. I already mentioned the forms of business entities, and I said the reason why we study about the business entities is for us to understand how to prepare the financial accounts for such kind of businesses. So this is also an aspect for you. These are basically theoretical things, but at the end of the day, you see, before you prepare financial statements for an entity, the key aspect is you should understand how that entity operates. And that is what that topic basically gets into. You need to understand how that entity operates. What are the key features? If it's a partnership, what are the key features? And that's how we get to prepare things like current accounts, capital accounts for partnerships, because we understand that in a partnership there are partners that have contributed to capital, and we need to be able to track, let's say, their capital. So that is important. And then we have, of course, the principles of double entry of accounting. And in here, we get down to understand how to debit and credit. I already mentioned the accounting equation, which is the assets are equal to liabilities plus equity. And then we'll be able to understand how do we apply the double entry system. One of the things that you need to understand is for every transaction, there should be a double debit effect. For example, if Jen sold goods worth 4 million, Jen sold goods worth 4 million. In that transaction, there is a sales account and there is a cash account. And the cash account being an asset will be debited, while the sales account being an income will be credited. So we'll understand how to play with that. That is one of the key goals for me. By the time you're done with this paper, you need to be good at double entry. Like it should be just like eating rice or, yeah, eating something very simple, chips and chicken for you. Okay. Yes, so the double entry keeping system will be understand the debit and credit, how to enter transactions and see. And then we also be able to understand how to prepare books of accounts. I already mentioned about the source books, the books of original entry. Now we have the source documents here. Then we have the books of original entry. If you follow through this class from the start, I already mentioned these different books of original entry. And in there, I also said the cash book was a book of original entry. And I said when transactions are removed from the books of original entry, they are entered into the ledgers. After the ledgers are balanced off to get your balances brought down, which are transferred to the trial balance. And I also mentioned about the reconciliations. As I said, we usually conduct bank reconciliation. And I tried to explain as well around that. There are also what we call adjustments to financial statements that we will also be understanding. There are things that do not happen on a day-to-day basis. We only look at them at the end of the period. Things like accruals, things like prepayments, all these things are looked at the end of the period. So we'll be able to just understand that. And then like, yeah, things like accruals, obligations for which you've not received an invoice, but they are valid to the business, prepayments, transactions, payments that have been made in advance. Okay, I already mentioned about IS 16 as one of the key standards. So here we'll be able to get down to understand how to recognize assets, what happens when we depreciate them, what happens on that disposal. Okay, this is also one of the common questions that the examiner usually wants to. They usually bring you a company with quite a number of assets, and they'll be asking you things like prepare the disposal accounts, prepare ABCD. I also mentioned about bad debts, and I say this is also one of the standards that shall be getting into depth to understand. IS2 there, we had the forms of business entities. So that is what happens when it comes to this. So we'll be able to appreciate how to prepare statements for each, because although there are similarities in each of the those statements, especially for different entities, but there are some specific aspects that relate to specific entities. When you look at how partnerships are structured, you'll be able to see things like appropriation of profit and losses, which are not things that are common in other kind of entities. So that is what happens. So we'll be able to get into depth that. The correction of errors, I already mentioned some of the errors, and I said that we have quite a number of errors, like errors of original entry, arithmetic errors, error of principal, error of single entry. We also get down in depth of these errors one by one. And then we'll also get to understand the preparation of financial statements from incomplete records. I already mentioned that. There are businesses, especially sole proprietorship businesses, that may not afford accountants, but may require you to prepare financial statements for them. Okay, I already gave you insights around the financial statements for non-for-profit. I told you here the profit and loss is called an income and expenditure account. The cash book is called the receipts and payments. So we'll be able to appreciate that as well. And then, of course, I told you that you have things like accumulated fund that are just specific to non-for-profit. Okay, you can see accumulated fund. Yeah. So that is it, as simple as that. So that is how the syllabus looks like. So as you can see, things are not many, and they are really understandable. One of the things that you also see, especially if you followed any of my videos, you'll be able to realize that I teach these principles in a simpler way. And at the end of the day, when you're done studying any kind of topic, you have levels of confidence around each of what has been studied. So I really encourage you to have the self-belief. I know some of you are joining this paper when you have already some background in financial accounting, which is very good, and congratulations. But I want to say that this paper, in the same way, you need to take it seriously. I usually tell people that do not just work for a 50 because that's a pass mark. Work towards having an 80, works towards having 90, because the better you have good grades, the better it is for you to be able to compete even with this paper. One of the things that you also come to appreciate, myself, I'm an accountant, practicing accountant, working for one of the big four accounting audit firms. So whatever I teach you is not theoretical, it's practical. So you see me sharing things from a practical point of view. I did not get a chance to be taught by an accountant. Most of the people that taught me were just teachers who had studied accounting. But I'll tell you that my classes are a bit different. The fact that I teach you from practice. And what that helps you is that even when you go for an interview, because definitely if you go for an accountant interview and maybe you're being interviewed, much like they'll ask you some of these things. So that is one of the things that I'll be able to tell you that why you need to choose my classes over others, because they have that practical element. I've also done quite a number of videos on each of these topics. So one of the things we usually do alongside our study is we leverage on some of the pre-recorded videos, which I share with you, and you're able to go through. Basically, you're doing your self-study as an individual. What that helps you is that you go ahead of the syllabus even before we get to mid of our study journey. And then the other thing, it also helps that when we have a class, you have questions to answer. And even for myself, when I come to class, you're basically asking me questions. I usually like people to ask me questions as your tutor, because through asking questions is you're able to learn. So that is what happens when it comes to this paper. So to those that are either you're following through this session online or you're following through this session as a recording, I welcome you to the financial accounting class. Make sure that you subscribe. We have a special WhatsApp group for those that have been able to subscribe. So make sure that you subscribe and pay the amount of money that needs to be paid so that you can be able to join the class. So what I'm going to basically do, I'm going to just share the number where you can be able to just reach out, just in case you want to be part of the class. such that we can be able to study. I know we have quite a number of people that are preparing for different, let's say, exams. So just reach out and then we'll be able to share with you our various programs on how you can be part. So my number is 256 7038 That is the number. If you're contacting me from outside I said Uganda, make sure that you put that +256 and you're able to reach out. And then we're able to see how we can be able to help you make sure that you're studying and passing. My students excel. My students get 90s. My students do not just cram things, they learn things and understand the concepts. Because the person who is teaching them is the person who understands what he's doing, is a professional accountant, and somebody who has taught this paper for quite a while. I think this could be, I think I'm getting to my 10th year of teaching this paper. And the other thing about it is that I'm already practicing accountant who has also practiced for average now over 10 years. So whatever I teach you is something that is practical and you'll be able to relate with as a student. So that is what I would say. And I have also done quite a number of revisions as well. I know that you're preparing for financial accounting. And you're not just here to learn the knowledge, but you're here to also be able to go and do an exam. So I usually do some questions and answers to help my students to be able to position themselves rightly, especially on their journey to passing the papers. So that is one of the things that you'll come to appreciate even as we proceed. So that is what I can say for today. That's what I wanted to just basically take you through and encourage you to make sure that you show up for the class. If you're part of the WhatsApp group, I'll be able to share with you more materials. I have quite a number of good notes that you can read. I also have access to exclusive videos that you will not find anywhere, so that you can be able to follow through the session. So thank you so much for following through the session and for coming. I hope you've learned one or two things. This is a first class, and I know that by the time you are done with the next classes, you will not be the same. You'll be totally different. So thank you so much for listening to me. I wish you all the best, and let's see how we can be able to succeed in this paper. All right.